Ladies and gentlemen, good day and welcome to the Shriram City Union Finance Q4 FY22 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pradeep Agrawal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Wayne. Good morning, everyone, and welcome to the quarter 4 FY22 earnings call of Shriram City Union Finance. To discuss the results, we have with us Mr. Y. Chakravarti, MD and CEO, Mr. R. Chandrasekhar, AD and CFO, Mr. Ravi Subramanian, MD and CEO of Shriram Housing Finance, Mr. J. S. Agarwal, CFO of Shriram Housing Finance, and Mr. Jason Conde, Vice President, Investor Relations. I would now like to hand over the call to Mr. Chakravarti for his opening remarks. Over to you, sir.
Thank you. Good morning, friends, and welcome to the earnings call of Shriram City Union Finance for the fourth quarter of the financial year 2022 and the full year's results, which we have declared yesterday evening. I hope you had the opportunity to see the key financial numbers and the investor presentation, which are available on the website of the stock exchange as well as our own portal. Q4 was among our better performing quarters in some time. On a consolidated basis, we disbursed loans worth 28,879 crores in FY22, a growth of over 49%. Our consolidated disbursements for Q4 FY22 were 8,645 crores and grew by 14.12% year on year. Our standalone disbursements were 7,527 crores in the quarter, a growth of 14.6% year on year. In fact, going forward, we expect the rupees 7,000 crore plus mark to be a new normal for our quarterly non-festival season disbursement for the products that Shriram City currently offers. This figure earlier was in the region of 6,500 crores. For the full year, we disbursed 26,140 crores of loans, a growth of 52.4%. It gives me pleasure to report that our disbursements, both standalone and consolidated, have been our highest ever. AUM as on 31st March 2022 was at 33,186 crores, a year-on-year growth of 12%. Our loan yields in FY22 improved to 20.81% as against 19.57% last year. Loan yields for the March 22 quarter were 21.41%. Our loan yields in FY22 are our highest in 6 years. Our interest income for FY22 was 6,531 crores, and that for Q4 was 1,751 crores. These again are our best figures ever. Our net interest income grew 13.1% in Q4 to 1,057 crores, and the year-on-year growth was at 10.9% to reach 3,998 crores. Net interest margins for the March quarter and for FY22 were 12.93% and 12.74% respectively versus 12.80 and 12.29 for the earlier comparable period. Our pre-provisioning profits for the March quarter were 463 crores, a growth of 22.4%, and the pre-pop figure for FY22 was 2,349 crores, a growth of 4.8%. Net profit for Q4 was up 7.6% at 303 crores, and for the FY22 PAT was 1,086 crores, a growth of 7.4%. These also have been our best ever metrics. Collection efficiencies showed progressive improvement in Q4, the numbers being 103% in January and February, and 111 in January and February both is at 103% and March at 111%. Overall, Q4 collection efficiency was at 106%. As a consequence of strong collection efforts, we have reported better asset quality. Our gross stage 3 declined from 7.3% in Q3 to 6.31% in Q4. Net stage 3-2 improved to 3.3% versus 3.98% in Q3. I would like to point out here that while RBI has allowed forbearance up to 30th September, or adapting the changed rule pertaining to classification of GNPAs, we have chosen not accept the forbearance. Our delinquency numbers therefore follow the same logic as in Q3, and we have implemented the RBI rule of 12th November 2021. Our ECL provisioning was at 49.28% in Q4 as against 47.35% in the previous quarter. Credit cost declined from 2.79% in Q3 to 2.15% in Q4, and from 2.9% in FY21 to 2.83% in FY22. The improvement in credit quality meant that we could write back some of our COVID provisions, and the same stood at 426 crores in Q4 as against 511 crores in Q3. We continue with the same number of branches as in the earlier quarter, that is 986 full-fledged branches plus approximately another 500 theatre locations. Our manpower count as of Q4 stood at 27,997 employees. On the product side, between the end of Q4 FY22 and the start of the quarter, we have introduced gold loans to 70 branches in the north, that is in Punjab, Haryana, Rajasthan, Himachal, Uttarakhand, Delhi, and J&K. Meanwhile, our digital two-wheeler loans called Express two-wheeler loans have continued to perform well. In fact, Shriram City won the award for NBFC Innovative Product of the Year for our Express two-wheeler loan products at the BFSI Technology Excellence Awards 2022. As far as resources are concerned, our finance team helped us borrow 3,790 crores in Q4 at an average cost of approximately 8.4%. Our borrowing from banks and institutions grew to 50% of our liabilities in Q4 versus 48% in the previous quarter. Our retail fixed deposit base grew at a robust 23.5% year-on-year and makes up 22% of our liabilities. We continue to carry a liquidity buffer, and this was to the extent of 5,235 crores at the end of March, comprising free cash and bank balances. The reasons for carrying a relatively large backup are, apart from the fact that we need to keep aside a certain sum for meeting committed borrowings for the related time period, we also would prefer to observe the COVID situation and be reasonably sure that we are equipped to handle any spike in the near future. Further, against the backdrop of the prospective merger which should happen by the end of calendar 22, we would like to ensure that we are comfortable on the liquidity front in the months leading up to the merger. The merger process itself is performing well. We have obtained approvals from BSE, NSE and have lodged the requisite application with the NCLT Chennai as well. While we await these regulatory clearances, we are keeping the decks ready for doing business after the merger. On a pilot basis and in about 40 locations, we have had the branch personnel of Shriram City and Shriram Transport exchange places so that they familiarize themselves with the products of other companies. Integration of HR systems and processes has also commenced. Our subsidiary company, Shriram Housing Finance, has registered the best ever performance in Q4 and FY22. They have crossed 5,000 crore AUM, which is a landmark for us, a growth of 36% year-on-year. They also reached their highest ever quarterly disbursement of 1,118 crores, a growth of 46% quarter-on-quarter. This in addition to their having clocked their highest annual disbursement of 2,739 crores, a 25% year-on-year growth. Their asset quality was also sterling with 90 plus DPD of less than 1%. In fact, it is 0.97, their best since inception. Shriram Housing Finance has expanded their network in the quarter, and this is now achieved 100 branches. Their cross-sell program, Grahapurti, whereby the Shriram Group network is leveraged for growth, is doing exceedingly well. And after having been successfully launched in Andhra Pradesh and Telangana, it has now been introduced in Gujarat. Among other sources, SFHL has been successful in raising significant refinance lines from NHB. Another feature of Shriram Housing has seamlessly built into the business is technology, tab-based customer onboarding, digital underwriting processes such as video PD, e-match and scorecard, a collection app, voice bots, a payment gateway-enabled website, and a mobile app that keeps ever-increasing usage and acceptability. With this, I would like to conclude my opening remarks. We are now open to take questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. Participants, please press star and 1 if you wish to ask a question. A reminder to our participants, you may press star and 1 if you wish to ask a question. We have a first question from the line of Pradeep Agarwal. Please go ahead.
Yeah, hi sir. Congratulations on a good set of numbers. I would like to understand, in terms of AUM growth going forward, as a merged entity, how do you see our product portfolio composition down the line, and which are the key product lines where the focus will be more as a merged entity?
The focus will continue to be on SME, but this also gives us a good opportunity to expand the gold loan network, which we are keen to explore now. Probably post the merger, 1 year from post the merger, we should be present in most of the locations where SAFC is. So that means from a present 700, 800 odd branches that we have for gold loan could move to 2,500 in the next 18 months. So that's one focus area. We will continue to focus on SME, which is our bread and butter business. Probably advantage now on the merger side, when the merger happens, advantage is that we will have a stronger, much stronger network, and some of the experienced people in SCSC to handhold this business in the north and western part of the country.
Okay. Just another question. As you mentioned, around 40 odd branches we have started pilot in terms of interchanging employees at 40 odd locations. So just some details around that, how that training or the swap is working out, and how long it has been there. Is it a couple of months? And how has been the experience in the initial period?
Yeah, in fact, it's been about 45-50 days old now. So far, it's going smoothly. We are both the sides are onboarding customers within the ecosystem now. Basically, cross-selling to SAFC customers, cross-selling to sub customers is happening. So we are actually, the idea here is to make sure that there are no hiccups in the operating systems, and that they can actually work smoothly across products. And the learning from this, probably we will, in another next 2 weeks, we will we've been on a continuous review actually. The idea is that from this 40, in another 15 days, we'll move to another 100 branches. So by the time, the idea is that by the time the legal merger is completed, the majority of our teams in both the companies are familiar with the products, and should be in a position to seamlessly sell these products.
Okay, sure. That helps. Yeah, thanks.
Thank you. Our next question is from the line of Varun Nabar from Nippon India Mutual Fund. Please go ahead.
Yeah, hi sir. Just one question from my side. So the personal loan NPA numbers have improved quite significantly over December to March. So just wanted to understand, how that has come about.
See, there are two things. One is the new book is performing extremely well. It's doing well. So, and the old book is running down. the old book means where we have actually earlier done personal loan in the market, right? So you'll see this improvement going forward continuously. Every quarter you will see this difference.
Okay, I was asking because it was quite sharp. And okay, so there's been no write-off or something like that. So this is all organic improvement that we're seeing as the book.
This is not because of the write-off at all. It is basically because the new book's quality is holding steady and the old book is running down.
Got it. So the strategy that we are employing here of continuing within the or the successful customers within the Shriram City network, that is what we are continuing to do right now as well, and that is the improvement that we are essentially seeing.
Correct. We are not. We are clear that we will not get into the market at this level. I mean, basically, the ticket size are around average ticket size is about 65,000. So we will continue to be there only, and we may in future get into the prime segment and not the middle segment.
Okay.
So
and how? Sorry. Yeah.
So basically, we anticipate a continuous improvement in the NPA numbers in the next 4 to 6 quarters.
Got it. And how will this book evolve once the merger happens? So will we also look at tapping successful customers within the Shriram Transport network to disburse in this book?
Yes, obviously, we will do that.
Okay. Good. That's all from my side. Thank you.
Thank you.
Thank you. Our next question is on the line of Krishnendu Saha from Quantum AMC. Please go ahead.
Hi. Just a small question on the cost to income. So how do we see that? Because it's been inching up. So what do we see out there, and especially with the merger? I think so we are training a lot of our force and all. They will see.
Sorry, your voice is not very clear. Can you repeat the question?
Yeah. Sorry, my mistake. Sorry. I was looking at the cost to income ratio. It has been inching up. I know that there's a lot of expenditure happening because of training staff and so on and so forth. So how do we look at that as a whole Shriram City and Transport put together? How do we see that thing coming around for us?
See, Shriram City probably by end of next year we should see it around the old days of 39, around 39 to 40%. The spike now you see is also because we've for the couple of years business was low, and this time the festival business was high, and the payouts, upfront payouts, the variable pay were a little higher. So that's the reason why the spike is there. Nothing to worry about. It will come back to the 39-40% now.
I see. So it should come back to that 40% for us. So this and one thing about this training of the staff it will be more important to train the staff of Shriram Transportation or Shriram City to make them. I suppose Shriram Transport the staff would be more trained hands-on to cross-sell. Is it the way to understand?
Sir, your question was not clear, but I'll explain it. I mean, if my explanation is okay, then we will see. Today, what we are trying to do is basically make people understand both sides products. It's not just, it's like SCUF team are also looking at SAFC products. Similarly, SAFC teams are looking at SCUF products, and we are training both these teams. Not just physical training, we also have an online training module called My Coach, where on a theoretical level all the product knowledge can be gained, but where we are making sure that all the employees log on to the My Coach, go through this, and then you have a kind of an exam to pass, to write, online exam, which they will be attempting. Apart from that, we also wanted the teams to have a practical experience. That's the reason why we have placed some employees of SAFC in SCUF branches and SCUF employees in SAFC branches, where they will be cross-selling each other's products to their customers. And that process, in that process, there will be the entire branch team gets trained.
Right. Yeah, no, I get that. I get the whole. I just was trying to understand that in the sense, just to sense that you will be probably requiring more training for Shriram Transport because they have less number of products compared to Shriram City. So I was just trying to gauge that. So nonetheless, thank you.
Shriram Transport also has, ancillary products like funding for in the ecosystem. They also fund for, say, customer needs a tire, customer needs a battery, or he needs software to vehicle or
yeah, insurance, working capital, and everything. Yes.
They do all that. So not all that different.
So, and could you talk about a little bit of the housing, sir? The things have improved over there. Disbursements have increased also. So anything over there? How do we see that business?
Yeah, sure. Can I ask Ravi? Would you mind answering that question?
Yeah. So on the housing front, last year was a good year for us. Our disbursements grew, and so did our AUM. AUM grew by about 36%. Our profits grew by about roughly 33%. So overall, it's a good story. Now, the way we look at the business is that one, we've established ourselves firmly in this space. We have leveraged the group cross-sell across the Shriram City branches in AP Telangana and across the Shriram Transport branches in Gujarat. So once these models are conclusively proven, we have a roadmap of 3,000 SCUF and STFC branches in front of us to cross-sell. As far as this year is concerned, we intend to focus on the 3 South India states and the 3 western states of Rajasthan, Gujarat, and Maharashtra. And most of our business, about 85 to 90% of our disbursements will happen in these 6 geographies. We intend to disburse somewhere, our guidance would be roughly in the range of about 35% to 40% growth in disbursements, and thereby slightly higher growth in the AUM. And going forward, our yields will remain static at about 12.2, 12.3, and including processing fee, etc., it will go up to about 12.5. And thereby, we will continue to deliver ROAs in the region of about 2.6 to 2.8 to 2.9%, and which means that this year will actually be a definitive turn in fortunes for Shriram Housing. And we are an ambitious business. We would like to grow, and I see us reaching a milestone of 10,000 crores somewhere in the middle of FY24.
Right. So that means 1.5 years from now.
Yeah, that's right.
Just on the branches, we right now have 100 branches, so we have access to another, if I see it right, so the whole 3,000 branches will be added. So that is what gives you the confidence, is it?
So we have about 103 branches. We had 103 branches live as of March 31st. And we also were operating through 200 branches of SCUF and STFC, 178 branches of SCUF in AP Telangana, and 22 branches of Shriram Transport in Gujarat. And the Andhra Pradesh Telangana experiment has proven to be very successful. It's been growing month on month, and it's now contributing about 8% to our home loan disbursements. We expect that to continue to grow, and our experience here gives us the confidence that if we slowly grow and ease into the 3,000 branches of SCUF over the next, say, 3 to 4 years, then that should be a good business model for us to pursue. Not only that, apart from that, we will also be setting up our own branches, and we expect to get to about 150 branches by end of this year, and thereby grow next year and the year after. Apart from this, we also are fine-tuning our digital initiatives. We have launched an app where consumers can digitally seek approvals for their loans, and it's an end-to-end digital process where only for signing of loan agreements and for the land records documentation, it's a manual process. Apart from that, every single element of this process is digitized. So we will leverage on that as well. And once we have fine-tuned that, then the entire country is our canvas.
Sure. In this, I'll get back in the queue. So just on this expansion, so you'll be using branches of SCUF and so on and so forth. So obviously our cost to income will be not that high, and with the digital initiatives, cost of acquisition will be high, not be right.
Yes. In fact, our cost to income this year is slightly over 50, and the reason for that is the investments that we made in our Grapurti initiatives and our expansion initiatives in the last 6 months of FY22. All that will start delivering results, and one is leveraging on the investments of the past, and two, cross-selling from the group will make sure that our cost to income comes down significantly. And FY23, it will come down to mid-40s, and maybe it will come down to the 39-40 range by FY24 or maybe mid-FY25.
Sure. Thanks. I'll get back into you. I have more questions. I'll get back. Thanks for your time.
Thank you.
Thank you. Our next question is from the line of Rikin Shah from Credit Suisse. Please go ahead.
Hi, good morning. Thanks for the opportunity. Just had one question. I noticed that there was some reversals in Shriram Housing due to change in accounting of direct assignment income. Could you please just elaborate what those changes were? Thanks.
Yeah, hi. This is G.S. Agarwal, CFO Shriram Housing. See, the reversal in the income was mainly due to the change in the methodology, which earlier we were doing on the contractual basis. So whatever assignment we were doing, we were booking upfront income on the entire contract of the contractual tenor of the contract. Now we have changes to behavioral, because normally the home loans run, those are contractually they are for 20 years or 15 years, but eventually they run off in the 8 to 10 years. And the LAP loans run off within 6 to 8 years. So we have amended that accounting policy, and due to that we have taken the reversal of the prior period, last 2 years also, which is amounting to around 16 odd crore.
Okay, perfect. That's very clear. Thank you.
Thank you.
It's a good thing to do.
Yeah. Thank you. The next question is from the line of Chandrasekhar Sridhar from Fidelity International. Please go ahead.
Hi, I had a few questions. Chakravarti, there's this fee and commission income which has grown pretty significantly. Maybe just color on what is driving that, and how should we think of that over the next few years? And then maybe if you could just remind me again, this gold loan, where are we just in terms of number of branches? And did you say that you will go to all the HDFC branches eventually? Third was just what's the incremental cost of funds during the quarter, and are we at what point do we start seeing benefits from there is a rating differential between the two companies at this point in time? Are we already beginning to see some of the benefits in the cost of funds? And the last question was for Ravi. Just how many of the SHFL customers at this point in time are either current STFC or SCUF customers? Thank you.
What's the fee income question to me?
No, so the fee income, it's grown substantially, the fee and commission income in SCUF. Just trying to understand what's driving that.
Because at SCUF we have obtained a corporate broking license from IRDA, and we have started cross-selling some of the insurance products to our customers. So the income is basically derived from income commissions from insurance companies. We are actually today have been selling products from Tata AIG, Care Healthcare, Go Digit, Shriram Life Insurance, Shriram General Insurance. So this is basically the income is from these activities, selling of this insurance. And so honestly, if you ask me, what am I targeting at? My target to my cross-selling has been 10% of PAT from fee income.
Sorry, 10% of?
PAT from PAT.
PAT from fee income. Okay.
Yeah, that was the target. So, Ravi, on the housing, would you like to?
I'll take the housing questions. One, as far as the branches are concerned, we are in 103 branches, and we are currently active in 200 Grapurti branches, which are 178 SCUF branches and 22 of STFC branches. What I had indicated earlier in my answer to one of the questions was that once these two are completely proven models without a flaw, then we have the entire 3,000 branches of SCUF and STFC open to us to go to. And we will go to them over the next 4 to 5 years. It's not going to be in a hurry, and because these are 10 to 15 to 20 lakh rupee loans, and we would just want to make sure that we do it carefully and in a measured manner. And
yeah, Ravi, I think the question was just, is there what is the number? This is from the distribution perspective. I'm trying to understand just the customer overlap in terms of what percentage of SHFL customers have either been STFC or SCUF or are current customers.
Okay. So historically, since we started this initiative only last year, in the incremental disbursals, not more than 2.5% of customers would be SCUF customers. And these would typically, even these 2.5% would typically be customers who have had a good credit history with SCUF and a good CIBIL score.
Okay.
You asked me about SCUF cost of borrowing, right?
Yes. The incremental cost of funds in the quarter and given the rating differential and the impending merger, what's the thought process on where the cost of funds go?
See, March 22, our cost of borrowing was 8.40. Whereas if you look at March 21, it is 8.67, the weighted average. So you actually see a steady decline from June to March. There is every quarter there is a steady decline on the cost of borrowing. The differential rating, obviously, yes, once we merge, the portion of borrowings outstanding in SCUF book could get replaced by a lower cost of funds.
Right. So, is there a number on the incremental cost in this quarter? What is the incremental cost of funds?
Incremental cost of funds? 840.
840.
Okay. Yeah.
Okay, just the last question because on gold loans. How many branches currently?
See, we are in about close to 600 plus branches in South and 100 branches in the North. Particular, yeah. So about 700 plus branches.
Thank you.
Thank you. Our next question is from the line of Sanket Chheda from B&K Securities. Please go ahead.
Yeah, hi sir. Congrats on a good set of numbers. I apologize if this is repeated. I joined late, but the disbursement in this quarter has been almost closer to what we did in last quarter on a standalone also. But last quarter our AUM growth was about 6% sequential. This quarter it's pretty low. So were there any accelerated repayments in some accounts?
Well, it's a routine thing only. See, probably one thing is that gold runs out faster. That could be one reason. Second is the business that I've done in the quarter. Probably you'll see the AUM growth over next probably. See, majorly it is a gold loan running down.
Okay. And I had a couple of questions on housing front. We have been very aggressive on growth and numbers are coming in, but do we have any thing on mind as far as profitability is concerned? Because over the last few quarters or couple of years, the OPEX has been coming down, but it's not resulting in the ROA. So for a 14-15% yield business to make a 2% ROA, it's really muted, right? So do we have any thought process in mind wherein where the OPEX ratio would settle and maybe what will be the yields we will be comfortable with? Because yields are also quite volatile for us over the last 2-3 years.
Okay, so if you look at our the investor deck which has been put up on our website, you would see that the yield actually is made up of two parts. One is the regular business income, other is the securitization income. And if you look at the regular business income, that's fairly stable. And what is volatile is actually the securitization income, which actually in the last year we did about 225 crores in the previous quarter and about 115 crores in the current quarter. And if you look at our cost to loan book, that's been dropping. In fact, it was 4.3 last year, and as in FY21, and it came down to 3.5% of AUM in FY22. The difference was the 0.4%, which is about 15 crores of investment that went into launching the 200 branches of Grapurti across AP, Telangana and Gujarat. If we ignore that, and if we take out the one-time change in accounting policy for recognition of DA income, then our ROAs, which today reflect as 2.1, would actually have been closer to 2.6, which would actually have been the highest in the last 4 years. And two, I think to your question on where our cost to AUM, cost to loan book would settle, our NIMs would settle at about 7.5 to 7.6%. Our cost to AUM will settle at about 3.3 to 3.5% for this year, and maybe the next year it will come down under 3. And credit cost would settle at about 0.4 to 0.5%, and thereby the return on assets for FY23 could be in the range of about 2.7 to 2.9, and FY24 would be over 3%. In a housing loan business, it's always a scale business, and two, I think you also have to, and the other reason why our overall ROAs are in the 2.1, 2.2% range is because our cost of funds were higher till about last year. In the last 2 quarters of this year, actually in December and January this year, we got a 500 crore approval from NHB, which came in at 4.5%, and we got another 150 crores of approval from NHB in March, which we have not yet availed of. So that has brought our cost of funds significantly down, and that benefit of that is expected to continue in FY23. Till last year, and for the first 3 quarters of this year, we were relying on bank loans and capital markets and our equity for funding. But with NHB coming in, our cost of funds has shown a tremendous improvement. We've dropped by over 100 basis points in cost of funds, and that is expected to give us a big boost in FY23.
Sure. So my last question was on gold loans. Coming back to we have reported kind of flattish growth, but did we experience any pressure on yields, particularly in Q4? Was there any drop in the gold loans for us?
No, actually, the gold loan dispersal actually has improved from 1676 to 1920 in March. And
I'm asking about yield, sir. Yield on the gold loans. Were there any impact on this in this quarter?
Yields are steady. There is no drop in yields at all. See, we are actually, as a policy, we have been operating, our yields have always been around 16-17% range, because we don't use any of these step-up schemes and, and schemes to attract the customer, walk in at a very low interest and then lock him up. We don't have any of these schemes. We operate the plain vanilla schemes. I'm personally against operating those schemes, so we operate plain vanilla schemes, and majority of my business is through word of mouth and basically referrals from my customers. So our yields have been pretty, we are able to hold the yields at that 16-17%.
Okay. And sure, sir, last question on credit cost for our standalone business, maybe heading into FY23, we have one of the highest overall ECL provisions on the book. So our stage 3 is 6.3, and we have ECL provisions of also similar quantum. So do we expect credit cost to be benign in FY23, or maybe the usual run rate of say 2.5 percent would continue?
Yeah. The credit cards we expect to be between 2.5 to 2.6.
Okay.
Coming financial year.
Okay, sir. Got it. Sure. Thanks. Those were the questions for me.
Thank you.
Thank you. The next question is from the line of Nischint Chauhate from Kotak Securities. Please go ahead.
Hi. Thanks for taking my question. One common question for both SCUF and Shriram Housing is what proportion of your borrowings are linked to repo rate?
As far as SCUF is concerned, nothing.
Sorry?
As far as SCUF is concerned, it's 0.
Mm-hmm. And none of the bank loans are linked to repo is what you're saying?
Yeah, no.
Okay. And then
It's a repo.
Hardly around 2 or 3 loans are linked with repo rate. Most of these are linked with MCLR of the bank.
And that MCLR gets priced like quarterly, monthly, or
Annual. It's all annual reset.
okay. So even if there is a rate hike, it probably kind of comes and hits maybe 12 months down the line.
Yeah, that's right.
Sure. The other thing now, other questions are on Shriram Housing. The NHB 4.5% funding line, is it kind of linked to a specific sort of an asset class, or is it a refinance, or what line is it?
So NHB has, hi Nischint, Ravi here. NHB has given us under 2 distinct programs. One is an affordable home loan scheme where it comes at 2.94, and the other is at a regular refinance, which comes in the range of about 6.1 to 6.3%. There is no cap on the regular refinance, but there is a cap on the affordable home loan scheme where you can, the loans have to be priced somewhere around 9.7, which is roughly a 7% NIM only on the yields. So the blended of this is about 4.5%, and we still have about 150 crores to draw from them, which we will be drawing in this particular quarter.
Sure. And just on the yield guidance of around 12.2%, what happens when the cost of funding sort of starts to go up? Because 2 things. One is that you have obviously got access to good NHB funding this year, and honestly we don't know how NHB policies probably shape up a few quarters down the line, and how where NHB rates go, and I believe these are floating rate loans, and I think your cost, generally you will also see interest rates in the system going up. So would you kind of keep the rate similar at around 12.2%? At what point of time will you really want to pass it on? The reason I'm asking this question is that many of your peers have kind of taken a call that the spread that they are maintaining, the spread that they're earning over the last 2-3 quarters is sort of higher than their long-term averages, and probably the first few, or maybe 1 or 2 rate hikes is something that they may be okay to absorb on their balance sheet. So what would be your strategy towards rate hikes?
See, one is I see a steady state NIMs of about 7.5%. So I think with even if there is a rate hike in the immediate future, we will be able to manage it at least for about 2 quarters or maybe even more, because the real impact of those rate hikes will start impacting our cost of funds only maybe closer towards quarter 4 of FY23 or beyond. 2, our discussions with NHB have given us the confidence that there will be a significantly large, at least double of what they gave us last year coming in this year. So we have a fair bit of expectations on the NHB refinance as well. 3, if it comes to a situation where we have to pass on the rate hikes to the consumers, we will be able to, because the rates are floating rates.
That's right. Just last 1 or 2 questions. I'm looking at slide 28 of the Shriram Housing presentation, and kind of looking at the bounce rates of I think 10.4% from Jan 19 onwards.
Right.
How does that kind of add up with E1 plus EPD of 5.3%?
You're looking at slide 28. Okay.
That's
so
right.
you're talking about the bounce rate is 10.4% and 13.6 is the overall bounce rate for the current book.
That's right. And your 1 plus DPD is 5.3%. So I'm just sort of trying to understand the reconciliation between 10.4 and 5.3.
So the 10.4 is only the current bucket bounce, right? And the delinquent customers don't get into this MIS at all. So this is largely your two, the 5.1 is customers who remain delinquent after collection from this particular bounce and after collection from the already delinquent customers who are in stage 2 and stage 3. And stage 3 is anyway 1%, almost 1%. So you already have about 3% of customers between 30 plus and above. So those customers are not here at all.
Oh, okay. Got it. I think this clarifies. Just one last question is on the housing side again. If I calculate your repayment rate on home loans, that works out to approximately 30%. In fact, it's gone up a little bit over the last 2 quarters. And if I compare this, or if I look at this ratio for peers, it's somewhere in low 20s. So I was wondering whether is it something to do with the tenor of the loan or anything to do with the customer behavior, or what could be the reason?
Let me just give you a bit of a flavor on the repayments. Our repayment on account of balance transfers is about 6%. Our repayment on account of contractual payments is roughly about 5% or thereabouts, or slightly lower than that. We do a lot of foreclosures on account of when a customer becomes delinquent. If he has to, when we have to collect money from the customer, we actually kind of nudge him to move away from us in case he becomes delinquent and becomes a bit of a painful customer to collect from. So there are some forced attrition in terms of getting delinquent customers or potentially delinquent customers off our books. Plus, we also have a fair bit of accelerated payments on our wholesale book, if you can call it, the construction finance book, wherein our repayments are significantly high because we keep a high degree of capitalization on these loans right from the beginning. So if you take all these into account, there is not much of a difference between us and the rest. The big comparison point here is the attrition in voluntary attrition of customers, which in our books is about 6%.
Sure, that clarifies. Thank you. Those were my questions. Thank you.
Thank you.
Thank you. Before we take the next question, I'd like to remind our participants to please enter star and 1 if you wish to ask a question. Our next question is from the line of Krishnendu Saha from Quantum AMC. Please go ahead.
Thanks for taking the question again. So just wanted to understand your AUM breakup of the housing. Do we, in the going ahead, do we see our construction finance picking up faster? The lab book, how do we see? Because we also have going to spend 0.3% on Griha 40. So what is the composition is going to be? Do we get into more risk profile assets like construction finance and lab? How do you see?
So, Krishnendu, we are a housing finance company and our core purpose of existence is housing. So housing will always remain over 60% of our total book. And housing plus top-ups would be close to about 65 to 67% of our book. As far as construction finance is concerned, we don't see it going beyond 7 to 8% of our book at any point in time. And construction finance plus lab will be about 30 to 32% of our total book at any given point in time, not more than that.
Okay, that will be the composition.
As far as the risk profile is concerned, we don't expect it to change much from where it is right now.
So, and just could you talk about a little bit of the Griha 40, I'm a little unaware about the whole matter. If you could just give me 1 minute on that.
So, Griha 40 is actually an initiative where we are leveraging on the group's distribution to originate home loans and fulfill the home loan needs of customers in the catchment area of the branch. So for example, if I take the AP Telangana example, we have 178 branches of SCUF.
Yeah, those 3,000. Yeah, I get it. That will be your 40. Thank you. Sorry, I don't want to repeat the same thing. Thank you for your time.
Thank you.
Thank you. Our next question is from the line of Sanket Chheda from BNK Securities. Please go ahead.
Yeah, hi sir. So my question was on this housing. Once we merge the businesses of Shriram Transport and stuff, how the reporting of housing would happen? It will continue to be reported as a sub, or it would be then one product line of the merged business?
It will continue to be a sub of the merged entity.
Okay. And do we plan to maybe take it out at some point in time, do a separate listing on it? Separate listing of the housing.
YC, you want to answer that?
No, you can answer it.
So I think, listing is always an option. Taking it public is always an option. But the reasons for listing have to be right. Just because everybody is running about listing their companies and realizing value and kind of diluting stake does not mean that we should also do it. We will list when the time is right and when the reasons are compelling.
Sure, sir. That is all.
Thank you. Our next question is from the line of Rajiv Venkatesh as an individual investor. Please go ahead.
Hi, sir. Are you able to hear me? Is my voice audible?
Yes, you're audible.
Yeah.
Okay. Yeah, great. So I have a couple of questions, especially on the two-wheeler loans and auto loans. They have come down significantly. Any view on the business dynamics?
What do you mean come down significantly? It has not. How did you say? I mean, how do you say it's come down significantly? Two-wheeler actually, the AUM has grown from 6,885 to 7,764 crores. And auto from 546
so how is... No, I'm looking at quarter by quarter. So in the December quarter, it was 2,238, and this.
Two-wheeler we can never compare from a third quarter to a fourth quarter, because third quarter, Diwali and Dussehra are a very, very big seasons for two-wheeler business. That 1 month, it's a huge business. So basically, if you look at it, two-wheeler from a 2,200 to 1,600 crores drop is because of the Diwali season, mainly because of Diwali and Dussehra season. It's an annual phenomenon.
Okay.
Nothing significant about it.
Okay. And when I see the disbursements, major contribution are from gold and MSME. So how do you see the MSME sector shaping up? I think you have given a clarification on the gold.
See, MSME, as I said, it is a bread and butter product. We will continue to focus on this. In fact, as I mentioned earlier, that we intend to take it to all our the new territories that we have not moved into, particularly deeper into Rajasthan, UP, parts of Bihar, and MP and Chhattisgarh is where we want to focus in the next 12 to 18 months on this MSME. So it will continue to grow. As far as gold is concerned, it's a product. I mean, you can call it as a treadmill, because whatever you disburse at the beginning of the year, by the end of the year, you will see only a 5-month or a 6-month disbursement as your AUM. So you need to keep running. So the disbursements will look high, but the growth in AUM will not be commensurate with the disbursement number. The tenure of the gold loans are between 150 to 180 days.
Okay. Yeah. Thank you, sir.
Thank you. Our next question is from the line of Chandrasekhar Sridhar from Fidelity International. Please go ahead.
Hi. Mr. Chakravarti, could you just confirm again that at this point in time, at least, the personal loans continue to be a cross-sell product for, the good two-wheeler customers, sorry?
100%. 100% they are existing customers of SCA. It's two-wheeler. Basically, see, one thing here is that none of the SME customers can take a personal loan. The IDs are barred, so even if the branch wants to disburse, they cannot disburse a personal loan to an SME customer.
And the idea is that for a reasonable future, you'll do this. The open market's not going to be coming in that soon.
Yeah, correct.
Has there been any change in the ticket sizes or the tenors which you are doing personal loans for now?
No, not really. They've been steady. Gold around between 50 to 60,000. SME between 10 to 12 lakhs. It's all pretty controlled. The ticket sizes are pretty controlled.
Sure. And can you just help us with maybe a number for the next edition from growth? I mean, I think Umesh on the call yesterday was saying that 15% consolidated, which means that sort of SCUF Concall needs to grow at maybe about 20%, which if I work backwards, it means about 16-17% on the standalone business. Is that fair assumptions to work with?
Yeah, you're right. So on the ticket size, one product actually has gone up, that is two-wheeler.
Right.
Yeah, that's basically because the cost of the vehicles have gone up.
Sure. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Pradeep Agrawal for closing comments. Thank you, and over to you, sir.
Thank you, Aman. On behalf of Phillip Capital, I would like to thank the entire senior management team of Shriram City Union Finance and Shriram Housing Finance, and thank all the participants for joining us on the call today. Thank you, and have a good day.
Thank you all. Thank you.
Thank you very much.
Thank you.
Thank you very much. Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect.